Well, thank you everyone for flying a long distance and being there. I know that Tom just arrived. And I know that to get the panel right, you have to get the right panelists, right? And because we are talking about traditional finance and crypto finance today, I think what's right is to get the people with the right experience in these both sectors. And so to start with, I wanted to just introduce our panelists from their traditional side of the traditional finance side of the experiences. I think collectively we have 8 decades of traditional finance experience sitting on the stage. Tom, you have 25 years of experience in strategies and also equity research, macro research with JP Morgan before, and now with your own firm, Fundstrat. And Joseph, you are working in the traditional U.S. commercial banking sector for like more than 2 decades as well, working with all type of industries. And Rachel, you have been working with Deutsche Bank before on the sales trading side, and also Ant Financial on the cross-border payments, right? And also Daniel. Daniel was a trader with Bank of Merrill Lynch on the FX option trading for 10 years. And so with that, we're happy to kick off today's panel. So the first question is really to Tom. Tom, you are probably one of the most popular or most invited speaker on Bloomberg and CNBC for your views. And out of all your interviews this year, how many of that is in crypto? Is that crypto related?
Thank you. Thank you for inviting me, Cynthia. We do quite a lot of media, mostly CNBC, but Bloomberg and Yahoo and Fox News. But I think that this year crypto is coming up in at least 40% of the interviews I do.
Wow, that's a big chunk of the time. That means that people's attention is really in this space. And out of all your business, like how much of that business is currently from the crypto-related clients?
Yes. So Fundstrat's been in business for 5 years now, which is long enough to know that we're going to survive. We don't have to go back to our old jobs. And we have 150 clients in the traditional world in 16 countries. That makes up about 85% of our business today. So crypto is the other 15. But that 85% is probably going to grow maybe 7 or 8% this year, whereas our crypto business is up probably 400 or 500% this year. So it's a small number that's growing very, very rapidly.
Right. And you made a lot of predictions, on those media, and I would like to understand a little bit more, like what is your valuation model? Like, are you more like doing fundamental analysis, sentiment-driven analysis, or technical analysis? What are the school of thoughts that really back your most of your predictions?
It's a good question because when our traditional clients ask us about Bitcoin, and everybody is curious because nobody wants to miss out if Bitcoin goes to 20,000 or 100,000 or a million. I think it would be almost, a criminal act for an active manager not to be involved if Bitcoin's going to move like that. But the problem they have is that Bitcoin doesn't have intrinsic value in a classic sense because there's no centralized entity, so that's hard to find legal recourse. But I think 2 things really explain Bitcoin pretty well. I think the most logical that resonates with our traditional clients is actually looking at Bitcoin as a digital mining model. In other words, the cost of producing another Bitcoin is very analogous to them to how gold is valued. And so we've done a lot of work showing that when you do break-evens, Bitcoin has historically traded within bands around its break-even cost. And so 2.5 times break-even is the historical price for Bitcoin. So that should be fair value. And to give you an idea of how that worked, at the start of this year, even though Bitcoin was still in the grips of an awful bear market, the break-even 2.5 times break even was 14,000. So we were saying that by June you should see Bitcoin at 14,000. That same break even model now is saying fair value is around 20. So I think that it's probably appropriate to say Bitcoin should be retaining its all-time highs soon.
Great. That's one of the positive news that we received from this conference. And also, I think this year we have seen a growing positive correlation between the price of Bitcoin and also the price of gold. If you look at the past few years, the COMEX gold futures and also Bitcoin futures, you see a correlation like in the band of 80%, right? That's quite positive. So people start to believe more that this is really a safe haven asset, and it probably will a blessed asset when the other asset class actually tank. But also recently, I'm following some of your recent tweets, and you said that because recently we see Bitcoin come off a little bit from the 10,000 level to the current level, and that actually move in tandem with U.S. stock market. And so you make a remark earlier saying that you don't think Bitcoin will hit a new high until S&P 500 hit a new high. So how should we understand that seemingly controversial view? I mean, where should we stand between these two schools of thoughts?
Yes, thanks. And it's indeed not a very popular opinion to say Bitcoin goes up when S&P goes up, because I think people want to think Bitcoin is uncorrelated to risky markets. But the reason we've been making this sort of somewhat unpopular observation is I think people are overestimating how many people actually own Bitcoin today. Like I'll see a lot of published estimates that it's 50 million holders of Bitcoin. But you guys can do your own work if you speak to the exchanges and talk to them about active accounts, or if you look at wallets. I think less than 500,000 people in the world own Bitcoin, or at least bought it or used it in the last 12 months. So it's a tiny, tiny market. And what that means is if someone thinks Bitcoin's a hedge against calamity, that's probably a lot of the 500,000 people. But it's not a lot of the people who are going to be new to Bitcoin. I think people who are new to Bitcoin, because if it's only 500,000 people, the next million are retail investors that see rising prices, like whether it's through Robinhood, and they buy Bitcoin. So I think S&P and Bitcoin are kind of linked right now because the market is so tiny. And we've published research to show this, that if you look at the years where the S&P, so Bitcoin's been around for 10 years, but the years where the S&P has been flat or down, Bitcoin's had its worst years. The best years for Bitcoin have been associated with the S&P rising more than 15%.
That's interesting. I saw that chart before, and I find that's a very interesting perspective. And what is the main value anchor that you think for Bitcoin over longer term? You just mentioned there you don't think there's intrinsic value, but you think there will be like mass adoption when it become a more interested asset for the retails. Like, so what's going to anchor what are going to anchor the value for Bitcoin in 3 to 5 years time?
Yeah, it's a good question. I mean, I think one thing we have to remember is most equities have no intrinsic value. So everyone thinks when they buy a stock, because there's a legal entity they can sue, there's intrinsic value. But that's actually a misconception. 91% of the value of the S&P is intangible value, mostly being brand. So in other words, you buy stocks because they got a good brand, and the S&P's brand is growing. That's why it trades at a huge multiple to the rest of the world. It's just where you feel safe. Money is exactly the same way. Dollar is only based on the trust of the issuer of the governments, and everyone says, oh, well, the U.S. will defend it with guns. It's never going to defend it with guns, because when it comes down to using guns to defend the dollar is going to collapse. So why is Bitcoin useful? Well, it's really your ultimate expression of decentralized trust. You cannot hack the Bitcoin blockchain. I mean, you can try to attack it and have a rewrite, but you can't permanently change the blockchain incorrectly. And more importantly, like money, most people think money is being held or has to be used for as an economy thing. So like, you have to, Bitcoin standard should be you have to buy coffee with Starbucks. That's absolutely not true. If you look at how the dollar is used today, for every dollar that's used in the GDP of the US economy, which is 20 trillion a year, it's traded 96 times on a financial market as speculation. The single primary purpose of money is to speculate on a price. And so Bitcoin, even if people are speculating, it's actually the primary use of money.
Okay, thank you very much. Next question, I will move on to Joseph. And firstly, I want to thank Joseph for speaking at this event because it actually marks the first public speech by Signature Bank in any crypto event. I mean, today is the first time. So thank you very much for supporting us at this event.
We appreciate it.
Yeah. And also, I think many of you are probably his clients down here. So I want to understand a little bit from the Signature story. How and why did Signature decided to move into this new sector and seem to be quite aggressive and successful so far?
Yeah, so thank you, first of all, for having us. We're proud to be here. And, I think Signature Bank as a whole built its balance sheet off of traditional banking services. So, we're a publicly traded bank based in Manhattan with offices in San Francisco and soon to be LA, and traditionally built off of lending to commercial real estate, business to business lending, and growing organically. But the bank's view is they're always looking for an emerging business opportunity. And in 2018, the team that we have at Signature now that handles digital asset banking, we were at another institution that just pulled the plug on global initiatives. So we had to find a new home, and we really looked at Signature as the perfect opportunity. A, they have a balance sheet strong enough to support growth in this space, and B, they have a leadership team on the executive side that has the vision to know, 5 years from now and beyond, if you don't build tools for this asset class, you're going to be left behind. So we were fortunate enough to land that opportunity. But, speaking for myself, I think it was important to find a bank that would invest resources, not only for the short term, but for long term. We want this to be here to stay, and marrying a traditional bank with this industry is unheard of. There aren't many banks that support clients in this space, and we wanted to be the leading bank globally.
I really appreciate that attitude, and I think that's going to take you a lot further. And I think speaking of digital assets, still very nascent and small sector. I think a lot of us sitting down here is actually the first movers or taking chances or taking risks to be in this industry. And we need banking services, and we need that bank. We need the bank that holding the similar attitude and to work with us, take us further in this industry. And we also see that there's some competing banks out there, right, trying to get a grip of in this digital asset space because it's quite fast growing. And how would you see your competitive advantage in relation to some other competitors and in terms of your vision, your expansion plan, things like that?
So our competitors now are smaller banks that really focus only on crypto deposits, right? So they don't lend those deposits out. They charge their clients. We don't charge fees at Signature. We built tools, which we can get into in a little bit, to really advance this banking technology for this space. But not charging clients was really at the forefront of what we wanted to do. We just feel it's important to have relationships, and we have single point of contact. So we have a digital asset banking team that I head, and I have some great colleagues that work with me that really answer the bell 24/7. So if you want a traditional bank in the U.S. to provide service, you need to be global friendly and be available around the clock.
Right. Could you disclose what is the rough percentage of your business in crypto right now, and where you see that percentage will grow in 3 years' time?
So we really don't get into exact numbers, but I could tell you we're approaching 50 billion in assets as a bank, and currently less than 10% of that is held in the crypto asset space. We don't custody any crypto. We just provide the USD and FX settlement. And again, we'll get into that in a little bit more detail. But, we just look at it from a perspective that, again, we want to be leading in this space and for years to come.
And you see sub 10% right now. Where you see that to be in 3 years' time?
We consider it to be, we're going to advance that number significantly. I think with the tools we're putting in place and the platforms we're enhancing, I think we can easily double that number in the next 18 months. But we have to be a little careful too. Again, we built this bank's balance sheet off of, traditional banking services that our shareholders may or may not be familiar with this space entirely. So we don't want to absorb it, but we also don't want to be a bank that's heavily concentrated in one area, because that's also a risk for our clients to keep investments and money with us.
It always wise to take a more balanced approach. And for those who are unfamiliar with Signet, I think Signet has become one of the important infrastructure in this space, if you're in trading or if you're in other type of business in crypto. So could you just tell us a little bit more, for those who are not that familiar with this system, what is Signet and what exactly it does, and is any future plan to advance? How do you want to advance this system?
Yeah, it's something we're really excited about. We knew that coming into this space, you can't just be a bank that says we provide services. We needed a platform. So Signet, if you go, if you want to see the landing page, you can go to signet.com. It is a payments platform that allows for instant fiat settlement 24/7, 365. So the reason we did that, again, we have a heavy concentration in global clients, from Asia to Europe to the US, and we really needed something that spoke to that mass off of the Fed banking window. So you can settle fiat under 10 seconds, any time of day or night, 365.
Right. Any future plans?
So the future plans now, we're in the process of building an API to automate transactions for the exchanges and OTC desks. We want to add an FX component down the road next year. We're always continuing to think, how do we make this better? Some of our competitors use an API now. It's really on a bank ledger system. We felt that instead of spending money on legacy systems, let's build a new platform, that we can enhance quicker and allows us to move faster as more competition enters the space.
Right. During the past 2 days, you must have been talking to a lot of people sitting down here. And have you got any good, you think, smart ideas, or what are the loudest client requests that you hear most often in the past 2 days?
FX. Everybody wants us to hold FX, other currencies. Right now we support USD, but we understand the need for yen, euros, many other fiats. And I think that if you listen to your clients, being in banking, you'll succeed much faster than just shoving products on them. So we're always open to ideas. In fact, right now, as we're building out our API, we're asking for client feedback. We're going to whitelist a few select clients to give us a 3-month trial of this and make sure it's what they want. Because if it's not, we still are in the product stage of maneuvering, and we can change that and make sure it's something that you can use and that you'll want to use for years to come.
Cool. We definitely want to test that product out. Thanks, Joseph.
Sure.
Next up, we'll move on to Rachel. Rachel, I think lending business, the business that you had, is probably a perfect exemplification of today's topic, right? How traditional finance and crypto finance work together. So can you share with us a little bit more, what is your typical client profile like, and what are the most typical user cases?
Thanks, Cynthia. I think there are several groups of users in the world right now who are using our lending products. One largest group is, if you call them, the believers of Bitcoins and cryptocurrencies. And lots of like miners sitting here, they have Bitcoin and other cryptocurrency mined as rewards. But at the same time, they have to spend in the fiat world to pay their electricity bill, to purchase machines, etc. So one good way for them is just to pledge the Bitcoin in exchange for a fiat loan to pay all those bills. Because in that sense, you still retain the ownership of your cryptocurrencies. And then should the Bitcoin raise for the next, during next 1 month, 6 months, and you benefit from that. So this is a very typical user case for this. And then client also use these types of crypto pledge fiat currency loan products to add leverage to their investment. Think about that you pledge your Bitcoin bought and get a fiat loan, and then the fiat loan could be used to further invest into other assets. So it's a way of leveraging up. And the second group that we see is just the opposite directions. If you call them the hedgers, mostly in the markets. So for miners, they would expect that they will get certain amounts of Bitcoin mined in the next few months, and then in that they could borrow in advance the Bitcoin and then use it as a kind of hedge, because you are borrowing an asset, you are shorting the assets. So this is the second group. And the third group will be more sophisticated, and they will use this collateral lending as a type of arbitraging equipment and instruments to arbitrage against the funding market. So there will always be the arbitrage opportunity between the funding market and the futures market. So, but this is more sophisticated, and then we see less of such types of clients right now. Yeah.
So, of course, if it comes to lending, everybody care about interest rates, right? What's the interest rate to pay? So other than the price, what are the other considerations that the client pays most attention to?
I think I would say that surprisingly, interest rate sometimes is not the top priority for the clients. The safety of the assets is among I think it's the number one concern for them, because for such types of structure, you actually pledge, say, $100 worth of Bitcoin, and you have to have the haircuts because the Bitcoin's price would fluctuating over time. So typically it's about 60 to 70% LTV values of the loan. So they will be concerned that who is my Bitcoin sitting with, and then is there any guarantee that the Bitcoin could be returned to me at maturity? So I think that the safety is the number one concern. So for that, I think that way, put in lots of resources into building a very high standard custody solutions, even have the I think bank grade, military grade vault across 3 different continents, and they're very good custody solutions for that. And I think the next product features that they're looking for is really the transparencies and the fairness of the price, because for such types of collateralized products, one thing the client will be concerned about is that, hey, you are saying that you will be liquidating it in certain level if the Bitcoin dropped to a certain level, right? But how do you determine that Bitcoin price has dropped to that level? Some of the player does not play it professionally, but for us, we get the price, the view price, also the volume weighted price, average price across different exchanges, publicly trackables to provide a fair values for these prices. Yeah, and the others will be always, the product features that everyone likes, like convenient, instant. And these are the features that we listen to our client for, and then keep improving. Yeah.
Right. It's good to know that other than price, actually clients do pay attention to other factors like securities and transparency of the executed price. And that's actually a sign that this industry, especially these products, are getting more and more mature. So I think the benefits has been elaborated quite well. I mean, what are the risks, I mean, from the user perspective or from the platform perspective that you have seen in this collateralized loan life cycle? And how are you handling that risk?
Yeah, I think from the client's perspective, one of the largest risks will always be the jobs of the Bitcoin if you are pledging the Bitcoin in that direction, right? Because the motivation, very huge motivation for you to pledge Bitcoin is that you want to retain the ownership of Bitcoin to enjoy the appreciation. But at the same time, you keep Bitcoin out there, so you can sell it right now at 8,000 something dollar price, but if the price keep going down, you wouldn't be able to sell it at current price, right? So, and then you might get the margin call from us to top up. If you don't top up in time, there will be these liquidations events happenings. But to minimize the risk of this, I mean, sometimes in the events of liquidations, it means that the Bitcoin price drop dramatically. It's sort of like a stop loss for the client. So we hope to execute it at the best price that we can. So I think that then you could elaborate a bit, but we connect to our own OTC trading desk, which is connected to, I think, the largest exchanges, OTC traders in the world to provide enough liquidity for such types of trades. Yeah.
I think this sector is quite new, right, compared to some other sector like trading or mining, right? It doesn't exist 2 years ago, and now it seems to be at the scale of 5 billion. Is that 5 billion US dollar?
Yeah, according to some recent reports, the generated loan size about $5 billion around. But I mean, these are the number from third-party report that is not auditable. Yeah.
Right. So it seems to be growing exponentially well. And I think compared to some other traditional asset-backed loans or asset-backed securities like equity security-backed loans, where you think the real potential? Where is the floor? Where is the ceiling for the crypto-backed loans market?
Yeah, sure. I think I see great opportunity in this market. It's new, and I mean the product-wise is very popular. Always financing is one of the, I think, the oldest demands from all those financial instrument users, right? So I think right now the products is still very simple, and you don't even have a yield curve for such types of products. And you don't, I mean, you talk about asset securitizations, ABS, etc., and they haven't really been a market yet. It's developing, but there's a long way to go. And then I think fixed income markets has traditionally be one of the largest markets among all the financial markets products. So yeah, we see lots of potential, but the ceiling is out there, and that cryptocurrency is used as a pledge. So you could see the ceiling that if the crypto market cap, the total market cap does not grow a lot, and then you can't really grow the loan size because you always need the cryptocurrency as a pledge. So we wish the market could develop, and which we believe in, and then a loan size and more product could be developed. Yeah.
So there are two moving pieces. One is how much people use this instrument, and the other is that the overall AUMs of the pledgeable assets,
yes.
right? For this, actually, I want to hear Tom's view as well. I mean, you're very familiar with ABS market and CDOs, and where do you see this crypto now is still miniature, right? To grow from today into future, maybe 3 years down the road?
Yeah, I think crypto has a lot of runway for growth. In terms of total, network value, it's barely $200 billion. The equity market is $66 trillion. So think about how much larger that is. And real estate itself is over an $80 trillion market. So, yes, I think as network value reaches $1 trillion or $2 trillion, right? So something that's maybe 10 times larger. I think the proportionate growth of all these types of businesses and the plumbing is going to create a lot of opportunities. And actually, I think that's why it's going to be attractive, really, and bring in a lot more sophisticated infrastructure. But it's a great time for people to be involved because, the first to market sometimes really develop the first relationships with clients.
Right. Thanks, everyone. And next one, I would like to move to Daniel. Daniel, you're doing trading. So I think when it comes to trading, people care about two things: price, competitiveness, and also liquidity. So what do you see in that two aspects in 2019?
Sorry, talking about our liquidity,
the whole
price?
Overall market.
Or markets, right.
Where the people, market is driving in those two directions.
Sure. Thank you, Cynthia. It's finally my turn. It's been 35 minutes. I've been waiting for it. Number one, the market has evolved a lot in the past 1 year. I think the spread of the market is probably tightened 80% from a year ago. So we can see a lot of the very institutional player coming to the market. They began to source good liquidity and be able to provide very competitive pricings to the market. So on this front, I would like everybody to look at volatility adjusted bid-offer spread in Bitcoin. If we look at it that way, considering how volatile crypto is, this number is actually close to the stock market or close to a second-tier FX foreign exchange market. So it's very liquid. Well, looking from here, we think the market is going to continue to be very competitive. Maybe the room for more competitiveness is limited, but it will continue to go that way, and we're going to, gradually phase out the incompetent players. Another thing that I want to talk about is the market has started to evolve from a very chat-based, voice-based OTC trading to electronic way of trading, where people can trade via API or trade via single dealer platforms. This is the topic that we talk about in a traditional FX market. That's where I come from. Probably from 2009, everybody's saying, voice trading will be out. But they're still not out yet because traditional finance is really slow and electronics trading makes sense, but still it's growing very slowly. But in crypto, I think we're really going in a very fast way. And in probably 2-3 years, we will be very comfortable to see most people trading via online platforms without need to pick up the phone or open a chat with somebody.
Yeah, I think that's definitely the trend that I observed as well. I think we must recognize that cryptocurrency actually comes a way that many other asset classes that took decades or centuries to come through. We have accomplished that in probably 2 or 3 years' time, and especially in terms of financial service space. I think that's quite fascinating. We should be really proud of that. And other than that, I would like to understand that where do you see the crypto OTC market is going in the next 2 years in terms of overall market size in relation to today's?
Oh, right. Okay, in terms of the pricing I just mentioned, I think it's going to be very competitive. And in terms of the size of OTC trading, well, I think it's a difficult question to say, to be honest, because let's look back in traditional finance. Equity market is a very exchange-based market where people go to exchanges and clear and trade. And on the contrary, foreign exchange market, it's a very OTC market, where it's a market between 20 major dealers there because people trust them, and in between them they trust each other with their CSA and ISTA in place. So people always ask, crypto is actually more equity, more commodity, or more FX? I mean, I really don't know. Commodity is more exchange-based. But what we know is with more participants coming to this market, we're going to see the overall market cap growing. We're going to see the overall trading volume growing. And the OTC right now, obviously, is a still small part of the total trading volume, will definitely grow. That is what I can say.
Okay, cool. And mining is actually a production of a special type of commodity, right? If you see that digital asset as a type of commodity, it has its own cost curves, cycles, seasonalities, and also supply, demand, and things like that. So if that's the way, there's a lot of risk associated with the mining operations that miner will face from the very beginning to the end of the production cycle. So what are the tools that you think would be helpful to help this group of people to hedge the risks or mitigate some of the risks?
Sure. I mean, for most of the miners, I think the most familiar tool is the spot trading, where you sell your coins or you buy coins. And the past 2-3 years, a lot of people are starting to use futures because you can commit just a small amount of your money and using the margin to hedge your risk. But there's a lot of problem coming along with it because future markets you can get squeezed out. And also, people are saying some future exchanges, they're not clean enough. You got washed out of position and goes back. So it's been a pain point. So. For us, one category that we have been spending a lot of time on is the derivative markets, where per se options market. Actually, in this meeting, I've come across a lot of interest in how to use options, and some of the clients, they're very sophisticated, coming from traditional finance market. They're like, I know how to use options, so how do we do it on BTC? So why options is good? Because first of all, they give you a non-linear payout, which it's a totally different from spot and future markets. It's a different perspective, and we put into practice what we can do with options. There's millions of ways to do it. You can buy the put option to protect against your overall operation, so that if coins price goes a lot lower, your mining machines are starting to be shutting down. At least you can make the money back from the put options you bought. Or you can simply sell some of your BTC to dollar and use a portion of that to buy some options to keep your, we say delta, or keep your position into it within the game, so that when BTC goes higher, you don't really lose money from selling your coins, but at the same time, you free up the money, your BTC inventory into dollar, and you can use the dollar for multiple things. You can, if you think the coin's price is not going higher while you're producing BTC day by day, you can slowly sell some call options so that you can earn some interest if coin price doesn't go higher. And if price goes higher, you just use the dollar you sold through the options to pay your bill. And even I was discussing with Rachel, if you're getting a collateralized loan from a loan provider, and you're worried about what if my loan, my collateral got washed out, well, you can bundle with the option where you can hedge against the possibility that things goes a lot lower, so you will never be washed out on your loans. So it's such a tool that you can just you can combine with spot, future, and forward, and you can tailor made for you. And at Matrixport, we're doing a lot of this for our clients. So right now it's been mainly with institutional clients, and we're actually going to roll out some retail products where it's non-linear as well, and we're very looking forward to that.
Cool. I think you're talking about non-linear product. A lot of non-financial background people will feel a little bit scary, right? How to understand this? It seems to be a lot of complexity involved. What is the risk is not as symmetric, right? So I think other than all the benefit, is another thing that really would help the adoption of this kind of products is to make it really easy to understand. Probably some scenarios illustrated so that people will understand in a layman terms that how that will work for them. Is there any plan on this front?
You're saying investor education?
Yeah, sort of investor education. I found I came from the commodity trading space, and I find that explaining options to, let's say, the real iron ore miner sometimes could be challenging, and often it would be probably easier if it could be baked into their sales purchase agreement, things like that. Is there any particular plan that to make things easy?
Right. Oh, of course. It's a very good question. I think there are two ways of thinking about this. One way is when we work closely with our institutional clients, we have enough time. The client with myself as my salesperson, we can explain the details about how exactly that helps you. So that's Seibert by spending a lot of time together. And on the other way is we try to make products, as you say, in a non-option related people's mind. They don't even need to understand there's an option in it, but they understand that by signing this agreement, this is the kind of payout you get when things goes there. This is the payout you get when things goes there. And if this kind of scenarios match with your need, then you're happy to do it, right? So I think on both legs, where we're trying to make it easier for clients to use this kind of product. But yes, there's a long way to go.
Cool. Good to hear about that. And next, I'm going to probably prepare a lot of some questions for all the panelists, and we like to hear some debates and different views on that. The first one is probably a very heated discussed topic is mainstream adoption, right? It's probably the most discussed topic other than Bitcoin halving. So what do you think? How would you define a mainstream adoption in your own from your perspective? And in 2019, what are the real examples of a mainstream adoption have you seen? Starting from Tom.
I think mainstream adoption is, there are some green shoots, the smallest evidence, but I think the best evidence that we would say is true proof of mainstream adoption is public acceptance of Bitcoin, which I don't think, at least in the US, is not there. So the best case would be like Coinbase, user base grows, they're advertising on national TV, they're allowed to advertise on all these social media platforms, because today, if you're not able to market on social media platforms, you don't essentially exist as a mainstream business. And so I think in the US, that's kind of the biggest trouble. That crypto is in the news a lot, but not in a good way. It's the White House saying they're not a fan of Bitcoin. It's the SEC fixated on fake trading. And, that's why we'll essentially never see, I think, a Bitcoin ETF until Clayton leaves. But I think Bitcoin's doing much better everywhere else. And just maybe one last comment, again, because maybe this will make some conversation. But if you ask me which region is the most important for crypto's development in the next 5 years, I think the single most important region is going to be the US. And right now it's hostile.
I think this year, a lot of people were talking about BACT, right? Many people took BACT as an indicator of mainstream adoption before it's launched. And it was launched in September, and we didn't really see the price going up. Instead, we see some slippage. It's going a little bit downtrend starting from that. And so far, we haven't seen much traction from the launch of that first regulated, CFTC regulated physical delivered Bitcoin contract trading venue. And also a lot of people were talking about ETFs last year, right? People think once ETF here, Bitcoin will be 60,000 or above, right? So a lot of things seem to be not working as expected or as imagined. Why do you think that's the case? And do you think that is because we believe in wrong indicators, or because the indicator might take longer time to work? Tom. I guess in my career, I've been lucky because I've watched a lot of mega trends in technology. Because, I started research in 1993 in equity research covering the wireless industry, which, like everyone in this room, is probably too young. You guys were probably watching Teletubbies in 93. But in 1993, there were 34 million cellular phone users. And the investment banks saw wireless as a good way to raise money and have banking fees, but they never thought wireless was going to be a real business, because all of the money in telecom was made in long distance and local phone service, and so wireless was like a toy. And then, of course, later in the 90s, as wireless and internet converged, I spent a lot of time following the internet industry. And, in 1993, cell phones, I don't know if you guys had a cell phone. Like, if you watched the original Wall Street and Gordon Gekko's on the beach with his, or maybe it was Charlie Sheen, but, trying to look cool in the Hamptons, and he has a cell phone that's bigger than his arm to his head. And that's what cell phones looked like in 1993 when there were 34 million users. And if someone said, oh, well, yeah, pretty soon every children's going to hold a cell phone, within a decade, I think most people said, well, then they're going to have huge muscles, because how is a kid going to hold that phone? So I think crypto is, a lot of things are coming together, and I think it is a mega trend. I think it's inevitable that you're going to decentralize a lot of financial plumbing, and then that value capture
gets returned either to the holder through the network value or, people save money. But it's going to take time. I think personally Bakkt is probably tracking the way they thought it would because it's physically delivered Bitcoin and they're going to, offer custody. And I might think it's a really good proxy for institutional flow. I think Bakkt is going to give us a lot of signal. And the ETF, I don't think we've written about it. I think the market's too small for an ETF. The average ETF, the 10 most successful ETFs launched in the US had $13 billion of inflows the first year. Think about it. That's 13 times the daily supply of mining. Bitcoin can't handle an ETF. If you had an ETF launch, we did the math, Bitcoin would go to $150,000 on the first day because that's how much volume comes in. So I think until the price is a lot higher, I think the ETF is, it's like Andre the Giant, grabbing a bottle of wine. It's just too tiny. The demand for the ETF would be, stratospheric.
That's a very interesting perspective. We often talk about what is blocking ETF from happening. We talk about custody. We talk about price manipulation. We talk about liquidity. I think even end of the day, probably liquidity is probably one of the most the untold reason behind the why it's not happening. And how about Joseph? What do you see about mainstream adoption this year?
Yeah, I agree with Tom's point. I think the U.S. has a long way to go. And that really, we get to see that on the bank side because there's only a few banks friendly to this space in the U.S. But really, it's because there's no regulatory framework. There's no clear-cut guideline on where you're supposed to operate. There's no lane to drive in. It's really, we're piecing this together as we go. But as a bank, we're trying to really be at the forefront on how we can help create that framework. And one step that we took was going to the NYDFS, our primary regulator, and saying, we want to build Signet. We want to show you what it does and get your support. So they did agree to endorse it and actually did a joint press release with us because we were the first bank in the US to release this type of platform built on blockchain technology that all the other banks may have been thinking of or have patents in, but aren't using it. They want to use the splash words in the news. We don't market, we stay out of the news. Yet when we launched this, we felt it was important not to put splash words out, but to show we have regulatory approval. But we're so far away from mainstream adoption in the US. And I think until more bigger banks get involved, we're going to be fighting this battle with regulatory framework for quite some time. But we hope to pave that way.
Sure, we need first movers in being the bulldozers in this industry. Right? Rachel, what do you think about mainstream adoption?
Yeah, I think that I would say that I will put it into two parts. First part that I agree with Tom and Joseph in that the mainstream adoption means that there is recognized mainstream financial institutions involved and regulatory frameworks are clear, and then the people widely accept Bitcoin and other cryptocurrencies that we have. And the second part, perhaps that's my definition, is that I really hope that the blockchain technology itself could have an impact and make a difference to the current financial systems. And the blockchain and the asset tokens itself really help and then have the large scale applications in your daily life and change these industries, change the financial industry in a good ways, be it be small or large scale. I would say that the real user cases of blockchain and its technologies and its impact into the revolutionary impact into the financial system could become the key. That's the first part. That is the regulatory approval, etc., to become real, because until then, the regulatory authorities will become very serious about this, and then they'll know that this is a very important issue to look at, and they will speed up their process. We are seeing some positive progress, and think about Libra. I mean, at least, people are criticizing, from the cryptocurrency world is not a public chain, so it has lots of limitations, but at least it shows the potentials that it could bring more users into it, and it could make a difference, and it could help with all those cross-border remittance for the small business and those underserved people. So, and you will see that the scales of it push the regulatory authority forward into studying it and to come up with the regime for this. Yeah.
Yeah, Diva definitely did a round of free marketing for Bitcoin, not necessarily for the right reason. And how about Daniel? What do you see in mainstream adoption?
Sure. I'll try to put a little bit of the trading perspective into it. The first half of this year, we saw a lot of interest from family office and hedge funds trading cryptocurrencies. I personally know quite a few founders of very prestigious hedge funds. They're trading cryptos, and they're like, I really want to do it, but I cannot do it under my regulated umbrella. So the interest is there, and so it's no-brainer that more of this kind of adoption is going to happen. Having said that, this is not a kind of institutionalization that we're talking about on big scales. We're not talking about the 60 trillion. Part of that 60 trillion is going to happen because obviously there's a lot of problems where safety, the custody service, about regulation. It's not even about a strict regulation. It's about the lack of clarity on regulation, and there's no correlated moves across the globe to move it forward. There are lack of leaderships. We have some leadership from Facebook, and how we saw how that got cracked down by politicians. So there's a lot of hurdles ahead of us. I think before that happens, we don't think we're going to see a massive adoption from institutions. But having said that, we need to look at this in a different perspective. That do we want to see that happening tomorrow? Let's say tomorrow the Goldman Sachs HSBC of the world is starting to trade crypto or starting to offer that on your bank card. It's going to totally change the industry. A lot of the major participants in this market right now will be meaningless. So I think it's not a bad thing that it's not happening yet.
We hope that they take the right pace to come. And the next question is really about brainstorming. So what are the products or services that you think miners or in general this industry would need but hasn't exist? This is a little bit tricky. It could be $1 million questions. Starting from Tom again.
I would say that if the question is, where is the next real opportunity for the business? I think you're probably I'm going to say something that a lot of people have said, but I think it really has to involve with better user interface and, better interoperability. I think that, whether it's interoperability between chains or, really good second layer solutions for Bitcoin, to me, that's really important. And maybe the overarching thing, because I heard Daniel and Rachel mention this, and also Joseph, custody and maybe ensuring custody is important because that helps bring trust and solve some of the problems in crypto, which is that, you still can't prevent people from being a fraud. Or someone dying and then losing something. So I think that, those kind of processes that ensure you to protect against those events might be quite useful.
Thanks. Joseph?
We feel we have the product in place already, with Signet, and don't mean to beat a dead horse, but it's about enhancing that product now. And how can we let's take feedback and really, invest more resources into this product to make it better for long-term, stability. Because there will be adoption, there will be regulatory framework, but if we don't have the right product, again, you can shove product down clients' throats all day long. If it's not something they're going to use, what's the point? And that's really our focus now, is to just enhance what we already have.
Sleeves up, heads down, hands dirty. Yeah. How about Rachel?
Yeah, I think I will speak from the lending perspective. Then I think like one thing that the miners demands but still lacking is really the securitizations of their assets, like the future mining rewards and their mining farms, because they find it's difficult to get financings to build new mining farms, import equipment and use this equipment as a pledge, etc. And then I would say the real life assets securitizations and could help them a lot in providing liquidities to their operations. Yeah.
Right, Daniel.
Oh, I think wealth management products very important because we talk a lot about trading, but if this is an asset people want to hold for long term, they don't want to just buy and sell all the time. They just want to make sure it's a good asset. I can make 8% a year. I'll just put it there for 5 years. So the lack of wealth management products in the crypto world is very obvious. I think it's going to come very soon. They're going to be good products because the broke products can take a lot of crypto asset into it.
Right. Now I come to the last question of today. I think it's really about being smarter next time. I think we have all made a lot of predictions or thoughts, and there are certain things that didn't go with our expectation. Could you share with us one thing that didn't go with your expectation? And in hindsight, what has gone wrong? Maybe starting from Tom again.
I would say that maybe the biggest change we've had in our opinion this year is, if you'd asked me at the start of the year or asked me 2 years ago, I would have said, Asia or Latin America, or maybe even Europe would be the most important region for where crypto develops. But I think 2019 has shown that from a regulatory perspective, the only place where there's not really good regulatory protection is the U.S. because, the president could ban Bitcoin. It's remote, but it's possible. And I think, we've realized that so much more wealth is in the U.S. And I think a lot of these guys, when they talk about even the incremental flows from family offices, it's coming from the U.S. So I think the U.S. is probably where crypto is for the next 3 to 5 years.
Yes, Joseph.
One thing we didn't expect at Signature was for another U.S. bank that's very large, will remain nameless, but their initials are JP, to claim to be the first to market, being so outspoken against Bitcoin, to come out and say publicly, here, we have a coin. Yet there's no regulatory approval for that coin, and there's nobody using it because it really doesn't exist. And it really caught us off guard because of how blatant they've been in the news against it. So, we welcome that news because, we just called CoinDesk and tried to right the ship. So,
right. Thank you. Rachel?
Yeah, I would say that a little bit to the disappointment is that still this year we haven't seen larger scales of applications of blockchain technology into, lots of user cases in your daily life. And this is a thing that would be very important for the whole market to develop organically and to grow substantially. Yeah.
We hope that will come. Daniel?
Oh, I think to me, the bear market is really shorter than expected in a way that I think, including myself, many of the people in the market didn't expect the big move from 4,000 to 8,000 within just a few weeks. That's, from trading perspective, the biggest surprise this year.
Wouldn't that be a good thing?
It was a good thing, yeah. We made money.
Okay. With that, I will close today's panel. Thank you all for your valuable insights and for the food for thought. Thank you.
And thank you.